Okay, thank you very much, David. It's always a pleasure to join Timing Research on these things. So, with today, a lot of interesting things going on in the market today. So this ought to be a good session, and I'm looking forward to some great interaction with all the folks that are tuning in today. Outstanding. All right. So you may or may not know who I am, and so I just want to bring up one slide. This is the only slide that I will show today. Everything else is going to be a chart. So again, my name is Doc Severson, as David was saying, and I've been in this business now since 2005. Currently, I help people through a couple of different vehicles, which are 12minutetrading.com, as well as working the crypto markets with ReadySetCrypto.com. I've been doing that since 2018 now. OG. So I am a past contributor for Options MD, Theo Trade, Docs Trading Tools, and Options Linebacker. So I've been around for a while in this business. My specialty, fractal price analysis, which is what we're going to go over here. Options and futures strategies, trading mindset, trying to get the handle on that lizard brain that we all have. And I was trained as an engineer, so my job is to solve problems. So that's what I try to do. So when we identify a problem, we try to solve it through some form of logic and make sure that we can find a way to make money from it. So to that point, I've written a couple of books which are available on Amazon.com. Hacking the Holy Grail was my first book. The Trader's Guide to Cracking the Code of Profitability. So it's basically how to use your brain as your trading edge. And then fractal energy trading. So everything that you're going to hear me talking about today is basically outlined in this book, which is, again, available on Amazon.com. Get the paperback, don't get the Kindle version of it. It's just a much better experience. Okay, so with that in mind, I will look for any, let's see, I'm going to go ahead and minimize this. We're going to bring up the charts over here and get going with this. So here's a quick intraday chart of what we were looking at today. So we typically use tick charts in my trading room because they offer a much more accurate experience of what's happening here. So this was our opening range, this red box here. This is the first 30 minutes of the day. And then we started moving above the anchored VWAP, which is the pink line on there. And then, boom, here's the expected move. And we squoze right above that thing. So we're going to watch this into the end of the day here. So I'm going to have this in the background. But generally what I'm doing when I'm looking at charts is looking at 3 different time frames. So if you guys have any symbols that you want me to take a look at, we can certainly do that. Here's the NDX, which is the NASDAQ 100. And what I'm going to do is everything is going to have 3 different panes on it. This is the monthly chart over here on the left-hand side. Approximately 5 times faster than that is the weekly chart, which is in the middle. And then approximately 5 times, well, exactly 5 times faster than that is the daily chart on the right-hand side. So this is that family of 5. You have the monthly, the weekly, and the daily chart. So this is what I will also call the child time frame of this arrangement. So it has the least amount of influence. The monthly chart has the largest amount of influence. Okay. So what we look at is not only trend on each one of these, what's the trend polarity, but also what's the energy. So down here is what's called the choppiness index. And what I'm using it to display is what I consider to be fractal energy. So think about it this way. Here's the simple way of doing this. Full, empty. Look at each one of these like a gas gauge on your vehicle. When we have high levels of this is where we have range contraction. Markets do the same thing again and again. They go range expansion to range contraction, to range expansion to range contraction, to range expansion. And guess what's coming next? We're about to see some range contraction. When is that going to happen? I don't know. We're not in the business of predicting the future, believe it or not. So technical analysis is not about predicting the future, guys. It's about giving yourself a framework from which you can make decisions. So range expansion, range contraction, that's something I'll talk about all the time here. And we'll be looking at every single one of the tickers that you guys have. All right, so that's the NASDAQ. Let's go straight into the first request that I have from bill number 7, which is MYRG. MYRG. Okay, I've never seen this chart before. Never seen this chart before. So what I'm going to do is, again, monthly, weekly, daily. And I'm going to identify what I believe are some patterns here. So one of the things that I like is understanding what the trend line is. See if I can get this to draw here. So we do have a trend line, which is, give me a second here and I'll see if I can get this arranged. That is kind of where I see the trend line with this. Now, some things in trading are science. So we look at numbers, we look at specific objective things, and some things in trading are art. And identifying trend lines and where a potential trend line would be is definitely part of the art situation here. But this trend line shows that we do have generally an uptrend with this. So range expansion goes to range contraction, to range expansion, to range contraction again. We had range expansion, and what do you think is happening right now? We're in a corrected period, range contraction. Where will this come back down to? Where will this stop? So one of the things that we can look at to understand where this is going to stop is down here at the daily chart. Daily chart, what we want to look for, what we have on the daily chart is a downtrend. We have lower highs and lower lows. Each one of these confirms, and now we have the violation of the 200-day moving average in green, which is not necessarily good, but we are getting very, very close to probably a landing spot for this. Notice that when the price moves like this, it does fall into exhaustion down here. Remember, this is your gas tank full, empty, like this. So we're getting down into the area where you might be starting to see some exhaustion. You might start to see this transition. So I've got 4 rules that basically, I'll go through these again and again. 4 rules that basically everything runs by. Number 1, larger time frames dominate the trend. This is not going to just stop and reverse as long as we have a monthly chart, which is still making higher lows, higher highs. This is still a higher low. So until such time that this monthly chart puts in a lower high, lower low, we still have an uptrend. That's rule number 1. Rule number 2, though, says that reversals start from the inside out. So if we're going to see this reversal back up, it's going to start from the daily chart. So right now, we talked about this being in a daily downtrend. What's going to happen at some point, we're going to have to see a higher low, higher high combination. We're going to have to see a change in polarity back up to the upside on the daily chart. That's what will happen first. Okay. And the fact that we're down into daily exhaustion shows that this may be starting fairly soon. Now, what I think is ironic, you got the rest of the market absolutely ripping to the upside, and you have MYRG going to the downside. So, right, we're going to have some type of money rotation into this for some kind of reason. Okay. So, Bill, that's my view on this, is that we're pretty close down to a confluence of support down here, which is the trend line. You're also getting exhaustion. However, I would watch that daily chart for the reversal back up to an uptrend, but don't just assume that it's going to print new highs. This may only jump up to a lower high and roll over. So be careful if and when that happens. All right. If you have any follow-up questions, let me know, and I'll always circle back on that. Okay, next one from JM is Nugget. I remember trading this one. There's Nugget and Dust. And these are a little bit difficult because these are ETFs which get oh, what's the word for this? They get marked to market. So basically they're always going to head down to zero at some point. But what you can do is you can trade them in the short term. So I wouldn't hold these for any length of time because it's just like trading the VXX. So these are like 3X. Nugget is like a 3X leveraged long for gold miners. I haven't traded this for a number of years now, but so right now what we have to do is we have to kind of focus on what's happening at the smaller time frames because we can't do much with this monthly chart here. So we're going to focus on the what's happening with the weekly chart. So where's the trend of this? Well, this is the difficulty. Really what's happening here, if you look at this, is we have a range-bound market. We have a market which is making, at least over the last, well, I would say since midway through 2022, we have a market which is making equal lows, pretty much equal highs, and it's just kind of trading within the range between 20 and 50. So that's what's happening. So you have a change in polarity back over here. You have a downtrend. Here's lower highs, lower lows. Then all of a sudden it puts in a higher low, higher high, changes polarity back up to an uptrend. And now you have a weekly higher low, a weekly higher high. Everybody gets all excited thinking that this is going to take off. What happens? Equal high, down to a higher low, lower high, lower low, reversal. So we're just trading within a range, and the same thing is happening here. So here's lower highs, lower lows, and then we're getting off the ground here. So far this is a higher low. And will this turn around into a higher high? I don't know. But the odds right now are that it's trading within this range. It may get back up to 50 or so. But keep in mind that your floor for this is right around 20 to 22 and a half. So you're just range bound in this area. But again, with Nugget, you don't want to keep this thing for too long. You don't want to hold the ETF for a long, long period of time. What I used to do was to basically sell puts against this stuff down in, below support, sell puts against it below support, let the price bounce away. And then you could do the same on dust in the opposite direction. Okay, so JM, let me know if you have any follow-up questions for that. But right now I just see range bound, and you can trade range bound on several different ways with this one. Okay, back to Bill 7. We're going to do Fox November. FM Fabrinet. Fabrinet. Are they optionable? Yes, they are, sort of. Okay, Fabrinet. So let's go through the same thing here. Actually, this is really nice because what we're seeing is we're seeing this sort of exponential trend. And what's really interesting about this is that if you do, let's do Fabrinet on a, let's just do a single price on Fabrinet. And so we'll go back as far as we can on this one. Now, here's what you do. Go out to the time axis. And let's see, where is that? It might be over here. Oh, here we go. We're going to do a log scale. This is on the price axis. Notice what happens when we go out to a log scale. All of a sudden, it turns into a very linear chart. But notice how the log scale goes from 7.5, and the further up you go, the faster it goes. And I've seen charts like this. Like if you go back on the SPX, you'll see the same thing. If you go back throughout all time on the SPX, you'll see a very, very straight chart on the SPX using a log scale. So sometimes a log scale can be very helpful on charts that do that sort of thing, where they just go berserk and you're having difficulty trying to understand how to chart it. Which right now, I mean, with FN, this thing is just ripping to the upside. And so traditional analysis is very difficult right now. But this is why sometimes it helps to go to a log scale for your price. Does that make sense, Bill? Okay, so if we do the same thing here, we'll go out to monthly, weekly, daily. And it's a little bit sloppy. Sometimes if you look at this, the daily chart, you can get caught up and you can get wrapped around the axle with the daily chart because it's a little bit noisy. It's a little bit noisy. So you see this thing just flying around like that. And next thing you know, you step back 6 months later and it's higher. And sometimes the way to do that is just to stay with a larger time frame chart. So if this is noisy and if you find yourself getting stopped out unnecessarily, increase your time frame. Go to something like a weekly chart. But we do have weekly exhaustion, so it's likely to probably stall out here. And now this is an interesting thing as well too. Look at the two different time frames that you've got. You've got the daily chart fully charged up, range expansion, range contraction. Look at the amount of energy here. You've got a full tank on the daily chart. When you compare that versus the weekly chart, though, the weekly chart is exhausted. So think of it this way. Imagine a family vacation where you have a parent in the front seat. This is your driver. Your driver is the weekly chart. You've got the daily chart, which is your child sitting in the back seat. It's been sleeping all day long, wakes up all of a sudden at 8 o'clock at night, right near the end of the trip, and is bouncing off the walls, is excited. And the parent can basically keep their eyes open. Who's going to win that battle? Well, what has to happen to make both of these happy? This daily chart wants to do something. It's all this energy's got to go somewhere. And what makes them both happy is if that energy goes to the downside in this case, which allows the weekly chart to recharge because a move in the opposite direction will allow this to come back up here again. So I would say for Fabrinet, what you're starting to see is the potential for maybe a quick little downdraft here to allow the weekly chart a chance to charge up again. So how do you determine something like that, especially when this thing's ripping to the upside? What I would use, it's called a Darvas box, believe it or not. There was a guy, and I think he was from the 1950s is when he did all his work and wrote his book. Nicholas Darvas was a famous swing trader. Now, he was actually he was a dancer for his day job. He traveled the world and did dancing stuff. I don't know what he did. I don't know if you could do that today. But anyway, that's what he did. And so he would take telegrams and cables basically with the price action that he would get from his broker. And they would say, okay, I want you to buy if the price breaks above here. I want you to sell the position if it breaks below the bottom of this box. So this is the Darvas box that they would do. So Darvas box right now, the energy shows like it wants to break out to the upside, and it certainly could. But I want you to be aware that you could see a lower high setup and a very quick bull trap breaking through the bottom of this box. So just be careful here because you got that weekly exhaustion. And that could cause some unintended consequences. Okay, have I gotten through everything else here? All right. Time for some more symbols. So if you got some more symbols, shoot them in and we'll keep on going. I'm going to go through a couple here. I'm just going to walk through what I'm seeing on some of the major indices. Now, when we compare the S&P or the NASDAQ is driving the market right now. NASDAQ is in charge. The Dow is taking a rest. Think about this. What do we have here? Range expansion. We started out with a full chart here into exhaustion. Full, empty. So when you see range expansion into exhaustion, what do you expect to see? You expect to see this kind of walking sideways, maybe even pulling back during that period. This is actually a fairly bullish consolidation happening. Not quite what we call high and tight, but close enough in the weekly chart. What I will typically see when we see a strong move like this is I will see this strong move, and then I see what I call thick in the middle, strong off the bottom, thick in the middle, rising to a parabolic tail. We see this everywhere, thick in the middle, rising to a parabolic tail. That is the traditional. I mean, you can go through just about any time frame that you want to, and you're going to see the same thing. Strong off the bottom, thick in the middle, rising to a parabolic tail. That was 2017, 2018. So I think we may get some rotation back into some of the Dow components at some point, but they have been on the shelf really since the beginning of the year. Okay, we got Bapa's checking in with Roku. Let's look at Roku here. Checking in with Roku. All right, so let's start with a trend. What trend is the direction in the monthly chart? As the Scots would say, it's down. It's down. What do we have on the weekly chart? Weekly chart trend is to the downside. Down, 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 down. So in a way, this is actually like a bear flag. You get the initial move here, consolidation, and then you're starting to break below that as well too. So right now, every time frame that we have, whether it's the monthly chart, weekly chart, or the daily chart, is all compounding to be a downtrend. So this is where a lot of retail investors will say, oh, well, this is a bargain now. Don't forget that what is going down can go down more until it hits zero. I've actually seen that happen before. I've seen stocks just completely delisted, right? And just die during that time. We saw enough of that back in 2008. It was an ugly time. So right now, yeah. And also that trend line, here's the trend line, which is really important, and it broke the trend line. So this is where I spend less time looking at the energy. There's a lot of energy here, but this energy could go to the downside. Right now, trend is the most important thing on Roku. So again, don't take this personally. This is not an attack on your stock or anything like that. And hopefully you're not long, because right now things are heading lower. Okay. Next one is Bill 7 is asking for Delta Airlines. And then Billy was asking the question, how do we get the recordings? The recordings, I think, come out. These guys are really, really good about posting recordings. So if you're on the email list, you will get a recording of all the individual sessions. So they will record each individual session separately. So you don't have to sit through a 46-hour long video to find the section that you want. Okay, so that's Roku. Again, don't take it personally. Here's Delta Airlines. So Delta Airlines, this is interesting because obviously, with COVID and everything like that, there was nobody's ever going to fly again in the history of the world. That was the initial reaction back then, and somebody bought the dip. Okay. But what we care about is what's happening now. On the monthly chart, where's the trend? We did have a downtrend. We had lower low, lower high. Ooh, here's a higher low at the end of 22. Here's a higher high. We have a change in polarity right there on the monthly chart. So right now we have a monthly uptrend, even though it's somewhat stunted and it's not necessarily persistent. It's not like some of the ones that we just looked at, like FN. but monthly uptrend. And there's enough energy to allow it to do whatever it wants to do. Now, what's happening in the weekly chart? We did have range expansion down to exhaustion, and then it's taken a break here. So the uptrend is still persisting on the weekly chart, but it's in consolidation. It's in a corrective move right now. So now the energy is not quite full, but it's getting there. And then we just see on the daily chart, we see a little bit more of the same thing. Now, we did have a lot of energy here at one point, and now it's starting to pull back a little bit further, and that's because of the needs of the weekly chart here in the middle. So we have trend, trend, trend. I would say maybe not necessarily an uptrend right now because it looks like it's putting in a lower high, lower low. But that's just a pullback on the weekly chart. So you can have a downtrend on the daily chart, and that's just a pullback on the weekly chart. See how the puzzle pieces fit together. If you know how the different time frames, the puzzle pieces fit together, then you know what the price is doing. Well, that was exciting. We've got trades firing off in the background here. So I would say, even though this is not a massively impressive chart, but I would say at this point, you can look for dips, but don't forget, rule number 2 says that reversals happen from the inside out. So right now you have a downtrend, and this could keep on going. This doesn't reverse until you put in a higher low, higher high, and then you can take your long, or you can sell the put, or you can do whatever it is that you want. But right now, I don't know that this is necessarily ready because of the fact that we have these long swings, and Delta has big swings up and big swings down, because that's what the monthly chart says. Okay. So a little bit tough one to analyze just because it's such a choppy chart. Okay, next one is Wix. Let's get those tickers up there, guys. Okay. Let's take a look at Wix. Now, Wix was in a former uptrend, formerly known as an uptrend, now goes by downtrend. Okay, is that true? Not really, because what's happened is throughout 21, 22, this thing got hammered back down to 50. What's happened since that point? Higher low, higher high. Change of polarity, new monthly uptrend. In the mix of that monthly uptrend, you have a weekly chart pulling back, making higher highs and higher lows. So you have weekly uptrend as well too. Daily, where did this get to with earnings? Certainly earnings are starting to capture some attention, got into exhaustion, range expansion, moves to range contraction. It's not quite ready to go yet, but I like the trend. What you can do is you can set up a Darvis box on this one as well too. Little bit sloppy. Let's see what's happening in the chart. 57 points. I was wondering whether we were going to get. Yeah, we're back up to the highs again. Interesting. Back up to the highs of the day. Okay, Bappa, I see your SCCO. I'm going to look over here at the NASDAQ one more time. Has the NASDAQ hit 20,000 yet? We are almost there. Let's go over to let's do the NQ here. Now, this is not quite the same number, but what I'm looking for is whether this is going to hit the highs. Here's the market internals, by the way. Market internals are pretty strong based on where they came from. So what you're seeing in market internals, even though it's 211 out of 500, so that shows the number of advancers minus decliners. So there's still a number of decliners out there today. Still a number of decliners, but what's happening is it's who's advancing. When you got Apple advancing 2.5%, that's going to roll over just about everything. When you've got Tesla out there advancing over 7%, that's going to roll over a lot of things. So right now we have 3-to-1 advancers over decliners on the NASDAQ 100. And you're seeing the NASDAQ 100 up 310 points today. So that's going to drive just about everything. It's going to blow over everything. And if we look at the Dow is going to be still probably not doing much of anything. Okay, there's some of these like Apple, Microsoft are in the NASDAQ. See, we have CRM, that's in there as well too, but they're not really doing that well today. So when you have Apple and Microsoft doing this kind of thing up 2 to 3%, right now, Apple, the market cap of Apple is bigger than the entire Russell 2000. So this is kind of why we don't really look at the Russell 2000 that much anymore. It used to be the canary in the coal mine. It used to be the leading index to see whether or not, should we be long? How are fund managers positioning themselves? Are they getting out early? This was really the last leading signal that we had, where this high watermark over here back in November of 21 was really a great signal to get out before the carnage came. But right now it's been useless. Okay, off to the next one, SCCO. Get your tickers in, guys. Let me know what I can do. This is Southern Copper. So copper's been on a tear lately, as you might imagine, like most other commodities. What's our trend at the monthly chart? Trend, range expansion, range contraction. Back into range expansion, range contraction. Look at this. We had a huge number here ready for a breakout. Big breakout from there. Close to exhaustion now. This is why the price is coming back down. So a little bit of the trend is still to the upside right now, but you may see this 90 point retested from above. Same thing going on here. This is almost an inverted head with shoulders. And the upside measured move is this distance here, say like from 80 down to 40. And we broke out at about 90. If we add 90 plus 40, what do we get? 130. That's the measured move target. Measured move target we have achieved on the inverted head and shoulders on SCCO, Southern Copper. So now it needs to set up the next base. And it may take as long as this based on, the monthly chart, not quite at that level of exhaustion, but probably was a couple of weeks ago. So now you're going to see the daily chart all over the map. So we may be in for a tough period on Southern Copper in the near future. Maybe range bound, maybe good for iron condors, things like that. Okay, any other tickers for anybody else? Any other tickers for anybody else? While I got you here, what I want you to encourage you guys to do is to go out to, let's clear this up. If you go out to 12minutetrading.com, go out to 12minutetrading.com. That's me, right? Sign up for a free trial today. So you get 14 days of trial and you get 2 different trading rooms. So kick the tires, see whether or not we've got what it takes to help you and achieve your goals. Try it for 2 weeks. And then at the end of that, pick the one that you want or pick none of them. Fail. do what you want, but go ahead and take that 2 weeks of free education. Probably not a bad thing to do. All right, back to Thinkorswim. We appear to be holding pretty steady into the close here. I was wondering if we were going to give all of this back again, but doesn't look like it. Okay, CDNA. Care DX. Okay, let's go through the same process. Number one, we go through trends, starting at the larger time frame, the monthly chart. Monthly chart, what's our trend? We have lower lows and undoubtedly a lower high so far. Now, this is a pullback bounce. This is a bounce to the upside in the monthly chart. And from that, we are getting a little bit of an uptrend. This doesn't look like an uptrend that's going to go anywhere. Like a lot of times you'll see uptrends spawn from sell-offs and they take no prisoners. This one is taking prisoners. This is not quite doing what you want. So this is just localized trading going back and forth. This is not the kind of short squeeze that you want to see. You want to see all of these shorts that are trying to squeeze the last ounces of life out of CDNA are not getting shaken out. You know, if you want to see something like that, you know, go to GameStop and you can see your classic short squeezes for GameStop. That's all they do. Okay, back to CDNA. So right now, just looking at the larger time frame charts, this one looks fairly dire. Does not look like it's really getting anywhere. So what you're going to see is a lot of retail traders will try to catch the bottom of this. One of the things that I will never do is I will never go long on something which is not throwing off a good, healthy weekly uptrend. Good, healthy weekly uptrend. So yeah, you've got your golden cross here, but this is not really what I would call a good, healthy weekly uptrend. So this is still, the shorts are still in control of this thing. They're going through range expansion, range contraction. This is a consolidation favoring the shorts right now. Okay, Teresa, good to hear from you. Want to check into team. And I apologize. We're going to have all kinds of trades going off here in the last few minutes. But okay, so here's team as well too. So let's look at this one. Former uptrend, now a downtrend. Making lower highs and lower lows along here. And that's on the monthly chart. So I never know the context of why people chat in with, I apologize for this, guys. We're going to hear a ton of that in the last 20 minutes here. So I never know what the context is for people, whether or not they're holding something and they're looking for somebody to tell them sweet nothings that it's all going to be okay, or they're looking to acquire something at a lower price. And I hope it's the latter of the two, because right now the time is long gone to get rid of this one at a better price. So what we're seeing is a continual set of consolidation flags along the way, breaking to the downside. So we have trend at every time frame pointing to the downside right now. Even on the weekly chart, we have lower highs, lower lows, trend to the downside. Daily chart, trend to the downside. The only thing that's going to save this is weekly chart right now is close to exhaustion. So you might start to see some flag behavior. You might start to see this bounce up to a lower high. That will be another point at which the bears will take over one more time. Remember, you know, even though there's, let's see if I can find this here, stockcharts.com. This is something really interesting that you guys might want to look at. If you look at the NDX A200R at stockcharts.com, we have all-time highs on the NASDAQ, yes? And right now, what we have is, let's see if I can zoom this up a little bit. Here we go. Right now, we only have 66% of stocks above their 200-day moving average, only 66. So it means that 34% of stocks in the NASDAQ are below 200-day moving average. So you've got this game of musical chairs going on right now, where as long as the music's playing, then people are buying, people are putting money, but it's into an increasingly smaller and smaller pool of these mammoth, huge cap tech stocks that are doing it. And once we have something move in the opposite direction, so what you have is you've got 34% of the market, like team, heading down already. Money's already rotated out of this and will unlikely to be rotating back in anytime soon. Okay, next one along is Daniel Tong. So for SMCI, boy, is this a monster, right? Super micro. This is a great example of range expansion goes to range contraction. And then once it gets up just enough energy, range expansion again. Right? If you were going to climb Mount Everest, this is why they have base camps all the way along. So here's the first base camp, and you climb for a day or two, and then you get up to the next base camp, and then you're going to probably hang out there for a week to acclimate yourself to the lower oxygen. Next base camp, and then you do the assault on the summit. I don't know how many there are, but this is the point here. Range expansion goes to range contraction. To range expansion again, to range contraction. This is how everything moves. You don't summit Mount Everest in a day. And this is why stocks like SMCI move exactly like this. So here's the cool thing about this is if you've got tools like this, you generally know when this is about ready to pop. So what could you do during this time? Once this gets up to all this energy, you can sell puts. You could buy, out of the money options. You could do all kinds of directional trades with this. But what a lot of people will do is they'll see something like this and go, oh, it's a flat market. Let's do an iron condor. And they can't understand why they get run over. Right? So having an understanding of different time frames and what they represent is very, very important. Now, here's rule number 3. I went through rule number 1, which is that larger time frames dominate the trend. Rule number 2 says that reversals start from the inside out. So right now, this is consolidating. And in the midst of consolidating, this is the daily chart, which is printing lower highs and lower lows. So it's in a downtrend, but it's okay because this is just a consolidation at the weekly chart. But rule number 3 says that descending patterns will break to the upside eventually. So watch out for this trend line because once this breaks above here and takes out the former swing high, now all of a sudden you have a higher low, higher high combination. You've got your uptrend back again. And now you've got all that weekly chart energy coming on. You've got the monthly chart trying to come on. It needs maybe another month or so here of rest, but it's almost in position to start taking it on. But this is where you can start to identify the very first potential entry point into that new trend is going to be on a break of the trend line. So it's not a trading signal per se, it's more of a filter. You are more than welcome, Teresa. Okay, guys, I got about maybe 5 minutes left. Maybe 5 minutes left. Let's have some more tickers. Let's have some more tickers, whatever you guys want to see. Let's look at the market. Let's see what it's doing here. NASDAQ has printed a slightly lower high. You're welcome, Daniel. You're welcome. NASDAQ slightly lower high. We're seeing the market internals starting to fade a little bit, but still remarkable strength today. Were we able to hit on the NDX? Were we able to hit 20,000? No. We're 22 points away from 20,000. Amazing. Remember what I said earlier, strong off the bottom, thick in the middle, rising to a parabolic finish. Highly likely that we're going to see some type of corrective movement here in the next week or so. Don't forget, Wednesday is going to be a market holiday. So we may see a lot of people trying to get what they can and then not wanting to hold over a market holiday. We'll see. Okay, any last requests for tickers? Any last requests for tickers? Okay, let's see what the SPX is doing. Range expansion, down into exhaustion. Now we have weekly exhaustion, but not that bad yet. So it's not at the point. The NASDAQ is in pretty bad shape. The Dow is in great shape. You would expect to see money rotate out of the NASDAQ into the Dow. I don't know if that's going to happen, though, with window dressing into the end of the quarter. We got 2 weeks left for this quarter. And typically you see the stronger ones buying into the end of the quarter. But almost at 5,500, 12 points shy. So remember, guys, if you do any kind of intraday trading, or if you would have a benefit, I mean, typically what we do is we look at zero DTE trading. So every day, what we're looking to do is we're looking to take advantage of range-bound price action in the opening range. And that's what we traded today. We traded zero DTE iron butterflies looking for range-bound, and that's what it was looking like early on today. Got out of the trade in 29 minutes, $50 a contract. That'll put food on the table, and we do it day after day after day. And then from there, this is where you want to be directional. This is where you want to be directional. What a move. Starting to fade into the finish. Interesting. Okay. So again, I will bring this up one last time and then I won't bring it up again. So if you found any value in our discussion, then go to 12minutetrading.com and look for the sign up for a free trial today. So you get 2 weeks of free trial. No obligation. If you don't want to continue, you don't have to. Or you can just pick one of the rooms and not the other. Whatever you find the most value from, I encourage you to utilize all the free resources that you can, including what we have as well too. Okay, one last look here at the S&P, and then I will open it up for, it doesn't look like we have any other questions, so I'll just throw it back to Dave here. So again, the S&P looking like it is probably just about there, just about ready to move into the next corrective period. That could be anything from a 6% pullback to something a little bit more sinister. The monthly chart is showing strong trend. strong trend. This is typically a pretty good time of year for this market. So we could get into a little bit of pause as we wait for some kind of certainty into the final quarter of the year. I don't know what could possibly be happening in the final quarter of this year that would interest the market. Okay. So with that, I'm going to throw it back to David. David, thank you very much for the opportunity once again. And I hope this was useful for those of you listening and watching out there.